Hi everyone and welcome to today's morning report on Tuesday the 15th of December with me, Rich Perry, market analyst at Handtech Markets. European trading session, strong start actually at the open. We've had a rebound in the oil price and that oil price has helped to drive Wall Street higher, and it's very interesting because the oil price has been basically down pretty much every day for the past sort of 2-3 weeks almost, and that rebound in oil about 2% on the upside, obviously following on from a dip into new multi-year lows, has completely turned around sentiment on its head. That certainly was, Wall Street was trading lower, closed about 0.5% higher, and European markets have sort of taken that rally and ran with it. And it's considerably higher on the FTSE, about 1.5% up. DAX up 2%. That DAX continues to trade strongly higher and outperform the FTSE on the strong up days, which is another trade that you could potentially look at. But that rebound we've got at the moment is certainly help to drive this sentiment by this oil price increase. Now the markets are going to be looking increasingly towards this Fed meeting. Obviously we've got that Fed meeting tomorrow, and you've got a slight element of consolidation, although there is a sort of a bordering on a bit of a dollar weakness move today. The euro is still sort of making gains to the upside, still pushing back towards that 110.50 area, but this dollar just slightly weakening on that dollar index. Now that sort of move is improvement in sentiment also was seen in the Treasury markets yesterday. Sharp rebound in the Treasury yields on both the 10-year closing strongly higher, and also the 2-year rebounding as well, and that also seen in the VIX index, which came back after looking as though it was pushing strongly higher again. So sharp turnaround in sentiment, and that is certainly played out. Will it continue to play out today? Well, I think in front of the Fed, generally speaking, the markets are going to start to settle, although the Forex markets are still showing, as I said, dollar slightly weaker. Generally speaking, with the euro slightly making gains. The other currency pair that's actually trading strongly higher is the Kiwi dollar, which is around about 50 ticks higher, which is about 3/4%, and that's sort of coming just generally on local issues, really, whereby the Kiwi it's sort of pulling on it expectations of higher milk prices, but certainly that Kiwi is outperforming today. Now we've got the US inflation out today, and that US inflation data is expected at 1:30, and that could well have a driver, because that is the last bit of Tier 1 economic data in front of the Fed. It's expected to come in at 0.4% higher on the year, and that could, as I said, help to stabilise the dollar in front of the Fed. Before that, we've got the UK inflation data at 9:30. That will be expected to come out at 0.1%, so slightly bouncing back into inflation territory. And also we've got the German ZEW at 10 o'clock, which is forecast to come in around about 15, which is again a slight improvement on last month. So that takes me to my chart of the day. Well, we've got I thought I'd just have a look at the Swissy, really, because we've had the Swissy, which has been strengthening against the dollar, which has been pulling the dollar-Swiss pair lower. Now, since the Swiss National Bank gave its monetary policy update on the 10th last week, we've basically been moving sideways, and that's been coming around this key support around 98 figure. Now, obviously, we've got the continued momentum, which is sort of corrective on the Swissy, but look at this RSI back at towards sort of mid-30s and sort of stabilising. Stochastics are negative territory, but also starting to arguably stabilise as well. So the fact is that this is coming in an area which the Swissy is finding support. Which the dollar is finding support against the Swissy, and that is around this sort of big level of support here from the September-October old highs. Also, you've got drawn in here, which is this uptrend, which comes in around about 97.40 at the moment. So some levels which would suggest that perhaps we're starting to get into a region where the buyers might start to think about another opportunity to the upside, because generally speaking, this dollar Swiss is sort of pulling higher on the sort of higher highs over the past sort of 6-8 months, and that continues. And I think that being back in this sort of support band around 98 figure and holding, actually, I think that could produce an interesting opportunity. Here we go with the hourly chart, and you can see that the bearish pressure that we saw. Sorry, let me just unwind that. That the bearish pressure that we saw pulling on the hourly RSI way below 30 is no longer really being seen as in the last sort of few days as this consolidation has started to kick in. You're still slightly negatively configured with the RSI sort of failing around 60. MACD line still below neutral. But I'd say you're still taking on a far less bearish position on this dollar-Swiss pair now, and it seems as though this consolidation could well be coming around, as I said, that 98 area, and coming ahead of the Fed. So will this mean that we're setting up for a bit of a rebound on this dollar Swissy? Well, it may be the case. Anyway, I wish you good luck in your trading on dollar Swissy today, and I will speak to you later. Thank you.